Namaste students. Today Unit 12 Final Accounts of Sole Proprietors 1, that chapter we are going to see. Here the contents are Introduction to Final Accounts, Closing Entries and Opening Entries, Trading Account, Profit and Loss Account, Balance Sheet, and differences between the trial balance and the balance sheet. That is what we are going to see. So actually it's page number 239 in the new book. Okay, here the learning objectives are to enable the students to understand the meaning of final accounts and the purpose they serve, prepare trading and profit and loss account and balance sheet. Here the points to recall. So main our motive is to prepare trading and profit and loss account and balance sheet. This three account, it is very much important in your college also. Throughout your accounting life it will come. And points to recall. Following points are to be recalled before learning the final accounts of sole proprietors 1. So accounting process, trial balance, dual aspect concept, historical cost concept, periodicity concept, matching concept, these concept and all you have to revise. It will be in the chapter 2. Differences between the capital and the revenue expenditure, which we recently see in this chapter. Differences between capital receipts and revenue receipts, these are also we have seen recently. And the key terms to know here: final accounts, then financial statements, both are same only. Income statement means is nothing but profit and loss account, and trading account, profit and loss account, cost of goods sold, how much is the cost price of the goods which we have sold, that we have to find out. And gross profit, motta labham, net profit is the nigara labham, that's the pure profit, that is. And then financial position, balance sheet, all those things we have to see. Okay, 12.1, an introduction of financial statement. A trader wants to know the profit earned by him at the end of his first year of trading. Do you think the trial balance shows the profit earned? How will he find the profit? A trader wants to know the profit earned by. He wants to know how much profit he has earned at the end of the first year of the trading. Do you think the trial balance itself show the profit? No, how trial balance will show? It's a balances of accounts, no. So we have to find out through the trading and profit and loss account and balance sheet. See this final accounts, trading and profit and loss account, balance sheet. So this two comprises, actually it is not true, two, this is three. Trading account separately, profit and loss account, and then balance sheet. All these are comprisedly called final accounts. Okay. Today we see this introduction part only. Rest of the portions will be in the next classes. Okay, business entities raise funds, acquire assets and incur various expenses for the purpose of carrying on the business operation and earning income from such operations. So we already know that business entity raising funds, acquire assets means purchasing assets to meet various kind of expenses of the business. So for the purpose of business operation, earning income from such operation. Earning income is the very much important part. Okay, now every business main motive is to earn income and maximize the profit. These transactions are first recorded in the journal and then classified under the common heads in the ledger. You know that pretty well about that. It is recorded in the journal first and then we post it in the ledger, all those things. Preparation of trial balance from ledger balances helps to verify the arithmetical accuracy of entries made in the books of accounts. So trial balance of from the ledger balance helps very much to arithmetical accuracy. Arithmetical accuracy means that addition, deletion, all those things, whether it is correct or not, that is arithmetical accuracy of entries made in the books of accounts, but it's not at the end, and it's not the end of the accounting. Okay, and then we have to put some process, that is the business entities are interested in knowing periodically the results of the business operation carried on the financial soundness of the business. We have to know the financial wealth, the financial soundness, how much we are strength in finance, that we have to know. In other words, they want to know the profitability and the financial position of the business. They want to know the profitability. Without profit, why we are doing the business? So it's very much important to earn profit. These can be ascertained by preparing the final accounts or financial statement. The other name for underline students, that the other name for financial final accounts is known as financial statements. So financial statements and final accounts is not different things. It's same only. Okay, the final accounts are usually prepared at the end of the accounting period on the basis of ledger account shown by the trial balance. By using the trial balance, we are preparing this account known as final account. You just imagine, by using a journal we do the ledger. Those ledger balances we arrive trial balance. From the trial balance we have to do this financial accounts, that is trading profit and balance sheet. Understand? See, the final accounts or financial statement includes the following. One is income statement or trading and profit and loss account. It has two names, income statement and trading and profit and loss account. Both are same only. And then position statement or balance sheet. The other name for balance sheet is position statement. What position? Financial position. Okay. And then the purpose of preparing financial statements are to ascertain the performance of an enterprise and to ascertain the financial position of the enterprise. What is the financial position and what is the financial performance, that we have to understand through this. Okay, for performance we are seeing this trading and profit and loss account. For balance sheet we are putting this financial position, that what balance sheet. The income statement and the balance sheet are prepared for these purpose respectively. Income statement gives in the manner in which the profit or loss account for an accounting period. So this income statement gives profit and loss account for an accounting period is arrived at. The revenue earned and the expenses incurred to earn the revenue business during the periods are shown in the income statement under appropriate heads as per matching principle. By using the matching principle, all those revenue earned and the expenses incurred, what the revenue income we earned and the expenses what we incurred, that should be shown in the income statement. It is nothing but what? Trading and profit and loss account. All the nominal accounts and other accounting related to goods during the accounting periods are to be considered only in the relevant accounting period or not to be carried forward. Moreover, only these items are compared for determining the financial performance. All the nominal accounts, that means already know what is nominal account. What we do, what is the rules for nominal account? Debit all expenses and losses, credit all incomes and gains, and accounting related to goods during the accounting period ought to be considered only. That only have to be considered. For that accounting period is considered only in the relevant account period and are not to be carried forward. That should not be carried forward to the next year. It should be incurred in that period itself. That is the rules which we have learned in the matching principle also. Moreover, only these items are to be considered for the determining the financial performance. Hence, at the close of the accounting period, all nominal accounts, expenses, losses, revenues, gains, purchases, purchase returns, sales returns are to be closed by the transferring the income statement or trading and profit and loss account. Okay, and then all those accounts should be shown here. While transferring the items, it is desirable that the results of buying and selling of goods, the results overall operation of the financial performance are given separately. Hence, income statement is divided into two parts. Income statement is divided into two parts because What is the reason? The results of overall operations and financial performance are given separately. First one is for overall operation, second one is for financial performance. Hence the income statements is divided into two parts. Underline that. The first part is trading account, shows of the buying and selling of the. Second part shows the results of overall financial performance. The first part is buying and selling. What we buy, what we sell. That is enough. That is called trading account. And financial, overall financial performance, we do profit and loss account. The second part may be presented in such a manner to give the operating result and the overall financial performance separately. So we and then all direct expenses or relating items are transferred to trading. All direct expenses are, it will go to trading account. All indirect expenses, it will go to profit and loss account. Okay, all indirect expenses or losses and indirect incomes and gains transferred to profit and loss account along with net results of such trading account. So students, I have given a small introduction only. In our next classes and all, we will be seeing one by one deeply. Don't feel difficult. I have spoken only in, I have taken the lesson only in a simple English. So one or two times if you listen, you will understand well. Hereafter it will be very easy only. I will make you to understand easily. Thank you students. Today's homework, you take this lesson, financial statement lesson, and take page number 264. Here the multiple choice questions. No, this 10 questions you write and send. No need to write the options at all. You just write the question. Closing stock is an item of dash, means you have to write what is the answer. Its answer is current asset. That is enough. This 10 1 mark only you write. Okay, thank you students.